Hello and welcome to the weekly roundup for the week ending Friday the 9th of April. Hope that you're enjoying these weekly reports. Please do subscribe to receive regular stock market content, and any questions just pop them in the comments box below. I'd love to hear from you. Also, just invite you to follow our free stock market reports on tech, bank, stocks, IPOs, using the link in the descriptions below. It's free to subscribe to, and you'll get all the latest reports hot off the press. Right, so what a week we've had. The FTSE has been the star performer across the week, with COVID cases continuing to decline in the UK. Vaccine numbers are rising, and the UK economy is set to reopen on Monday. So the outlook for the British economy is bullish. This is reflecting the more upbeat outlook. The IMF upgraded the UK GDP forecast to 5.3% growth this year, up from the 4.5% forecast only in January. So it means that the economic growth here will outpace the Eurozone. The IMF also upgraded global growth to 6%, up from 5.5%, which just underpinned that risk sentiment across the week. The DAX and the Euro stocks hit all-time highs, as did the more domestically focused FTSE 250. So across the week, we've got the FTSE up 3%, DAX up 0.8%. Over in the US, Treasury yields have been falling across the week, which has helped revive demand for the growth stocks. The rotation trade out of growth into value stocks, which dominated last month, appears to have run out of steam as inflation expectations ease. Weaker than forecast jobless claims, combined with a dovish Fed Powell and supportive FOMC minutes, have also calmed market fears over runaway inflation. So the high growth tech heavy Nasdaq is outperforming the Dow, trading up over 2.5% this week compared to the Dow's 1% climb. On the vaccine front, regulators in the UK and Europe drew a line between the rare blood clots and the AstraZeneca COVID vaccine. So far, the impact of the news has been limited, and AstraZeneca actually trades higher across the week. In the FX markets, falling yields and a risk-on sentiment has seen the US dollar come under pressure across the week. The US dollar index trades around a 2-week low and is set to record its largest weekly loss since mid-December. The pound, this has underperformed despite strong fundamentals. After particularly impressive gains in the first quarter, investors are taking profits off the table. So the pound against the dollar trades 0.8% lower this week. Given the strong rise in the euro, there looks to be a rotation out of the pound into the euro in play, just as the markets start to be a little more optimistic about Europe's outlook. The euro against the dollar trades 1% higher over the week, and the euro has outperformed across the week despite rising COVID cases and tighter lockdown restrictions. In the commodities market, oil has come under pressure this week, both benchmarks shedding around 3% in choppy trading. OPEC Plus saying that they will increase supply as from May, sent oil lower at the start of the week, and then it failed to recover from there, really. So the demand outlook also remains weak. This is just amid the continued lockdowns in Europe and rising COVID cases over in India and Brazil. With the gold, dovish sounding Federal Reserve and weaker than expected jobless claims data has worked in gold's favour. The precious metal experienced a rare winning week, booking gains of around 1%. Notable stock moves, Delivery's IPO has been the focus of the week. It started trading unconditionally following its disappointing IPO last week. The stock trades around 20% below its IPO price before being opened up for retail traders, and it's lost a further 2.8% so far this week. Other notable movers are Saga, the over 50s travel and insurance specialist, has surged 13% this week after boasting of huge pent-up demand from vaccinated customers. The share price rose sharply even after posting a heavy slump in profits this year. We've also seen Page Group rally 14% this week, reporting and reopening optimism and following an upbeat outlook from the recruiter. The share price trades at a 2.5-year high, as it has predicted annual operating profits of 90 to 100 million this year. So that's all the notable moves. And thank you very much for watching. Please remember to subscribe. And like I said, any questions, don't hesitate to ask. And have a great weekend. Thank you.